Good afternoon from Los Angeles and welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to take a look at Google's chart post-earnings as well as a look at Vertex and an insurance broker with strong chart action. All right, let's take a look first at the major indexes. It's Alyssa Quorum here with Ed Carson. And Ed, we did see declines across the board. The NASDAQ, the hardest hit, down about 0.6%. The S&P and Dow finishing with mild losses here today. So what's really dragging down the NASDAQ? Is it Google? Or tech broadly?
Some of the big techs especially. Apple is down a couple percentage points, Google too on earnings. We saw Shopify at earnings, and it was up and down. It was probably down about 3% or so. So, it wasn't that bad, but the NASDAQ hit resistance just below the old high. There were some reports of China trade concerns, and that's not great for Apple or some of the other techs, not necessarily Google, but some of the techs. The S&P held its own, but we've had that situation. China trade has been something that sort of held us back. It's been either the primary or a contributing factor in basically all the stock market tops. It's been the primary contributing factor with the rallies too. We've been up and down on that news. If we really want to see the market power above those highs and really sustain, and because the S&P isn't really much above the January 2018 high, so you can sort of see we've been sort of moving sideways. But still, ultimately, if we go up 1% tomorrow, nobody's going to remember this day.
All right. Well, we'll have to keep an eye forward and look at what we do tomorrow. But let's take a look at a few individual names, starting with Google parent Alphabet, which fell over 2% today in heavy turnover in a surprise decline on earnings. So what does this really mean for Google's future here, I guess, in terms of what we could expect for this coming quarter?
Yeah, well, Google is investing really heavily in a hiring spree. They're trying to beef up, maybe trying to compete in cloud computing and some other things. So that hit margins a lot more than people expected. But you could argue, okay, Google did fall below a buy point that they cleared just yesterday. But on the other hand, it didn't fall that much. And given that the huge drop, the huge miss that they had last night, arguably the stock did reasonably well. So, the buy point's still valid. A bigger concern that, Chris Gessel, our, content editor, is always saying, he points out that Google really hasn't outperformed for quite a while, and partly because the growth has been a little slower. Obviously, earnings decline is not going to help so much on that, but revenue is strong.
Right. We'll definitely have to see if it will retest this buy point, because also our podcast guest last week, Joe Fahmy, was very interested in the long-term picture for Google and saying since it has its hand in so many different businesses, it's almost like an ETF in that sense.
Yeah,
so it's
really
just this really big behemoth that's doing lots of different things. But the surprise unexpected earnings decline is definitely something that we'll have to keep an eye on to see if that'll weigh down shares from here on forward. All right, and next let's take a look at Vertex Pharmaceuticals, which is extending its gains, breaking out of a base here after last week rising on positive news related to its cystic fibrosis drug.
Yeah, that's really they're a cystic fibrosis specialist, and the FDA approved early a triple drug combo. It's really expensive. I think $131,000 a year, but obviously, there's a sense that there's going to be pretty strong demand for at least a subset of patients that this will help. Stock really running up. Everything's looking pretty good. The volume was above average, not the tremendous, but they have earnings tomorrow, so investors should be cautious about buying this, maybe just waiting for the earnings gap, or maybe an earnings option strategy we talk about, sort of like trying to hedge your bets a little bit so you don't get caught out, because obviously bad earnings results, you just don't know. With Vertex or any other company, the stocks, sure, the stock might rise 10%, but it could also fall 10%. Grubhub fell 40% today.
Right. Yeah, that's pretty incredible. You're definitely improving your odds by either taking advantage of that earnings option strategy or waiting for the gap up, which to some investors might seem a little bit counterintuitive, but our research actually shows that the big gap ups are often a precursor to further gains. So definitely something to consider there as well. And last but not least, we want to take a look at a breakout out of the insurance space. Not a stock that we talk about all too often, but the ticker here is BRO for Brown and Brown, gaining over 4% today in heavy volume. A bit of an upside reversal actually here, fueling this breakout, which came in heavy volume. On acceleration of earnings up about 22% for the quarter, sales up 17%. So strong numbers on both the top and bottom lines.
Yeah, and it did rebound from the 50-day line, clearing the buy point. And the relative strength line has been sort of flat here during this consolidation, but that's after a long uptrend. So it was a nice action all year. And actually, I know we did an industry snapshot on the insurance brokers a couple months ago. It may seem like a boring industry, but it's been a strong leader. And this is one reason why you don't want to get into this mindset, I want tech companies or I want this, and it's like, only Lululemon or something like that. This is actually a very strong stock, strong fundamentals, strong technicals, and it's doing well today.
Yeah, that chart that we were showing right there is more of a shorter term picture, but if you take a step back and you look at even a weekly chart, the stock has been on quite a run this year. The last breakout before this was in April. So really, unless you're buying on the pullbacks, this is the first buying opportunity, or at least base pattern, that the stock has formed in quite a while. So definitely one for the radar.
Yep.
All right, everyone, that's it for today's show. But before we go, just want to let you know, in case you missed it, we do have a new episode of Investing Strategies out now. We have a new episode that launches every Monday night. And you can head to investors.com/investing strategies for the latest episode. We talked to a market technician about what ideally we would want to see from the S&P to really understand if it can make this next big leg higher. And we also talked to State Street's chief gold strategist about where gold could be headed in 2020. So again, make sure you check that out. And you can check out all of our content across social media, whether that's on Facebook, Instagram, YouTube, or Twitter. So make sure you're following and subscribing to stay up to date on all the latest. All right, everyone, thanks again so much for joining us, and we'll see you right back here tomorrow.